Hey CFMA, my name is Drew Wagner.
And my name is Emily Glanz. We are risk consultants at Cottingham Butler. If you're like most companies we know, it's likely you too are facing some challenging organizational pressures and rising costs, especially when it comes to your business insurance. And while it might feel like there is very little you can actually do about it, the good news is there are a variety of different strategies that can be considered to give you back the control you need. One strategy we will discuss today is a member-owned group captive. And while we are going to talk primarily about group captives, we want to point out that there is a complete spectrum of risk. Every program design, such as buying a guaranteed cost program or self-insuring, has a specific risk profile, and it's important that comprehensive reviews are done that can analyze the cost-benefit for each option.
So what is a member-owned group captive? Well, a group captive is an insurance company owned by its members and created to lower the cost of insurance over the long term by bringing together best-in-class companies that are dedicated to safety and who are comfortable taking advantage of group purchasing and sharing a small amount of risk. Different from what you experience in the traditional insurance market today, you are partnering with like-minded, safety-conscious companies that are also committed to lowering their total cost of risk, ultimately turning an insurance expense into a profit center. So to say it very simply, a captive is an insurance mechanism that allows your business to become an owner in an insurance company. Essentially, on a moving forward basis, you would be writing a check to an insurance company that you have ownership in. Rather than paying a check to a traditional carrier, you would be writing a check to your own captive.
The lines of insurance that are included in a group captive are workers' compensation, auto liability, and general liability. The concept is to retain losses that are predictable, such as high-frequency losses, and to transfer the unpredictable severity losses. Frequency losses are controlled through proactive safety services and claims management, while severity losses are managed through risk sharing, a reinsurance cover, and your umbrella policy. Now, as mentioned earlier, traditionally when you pay premium, it's a 100% fixed cost that goes to the carrier regardless of your loss performance. With a group captive, your premium is made up of three components: primary fund, excess fund, and operating costs. Typically, the operating cost is around 45% of your premium spend annually and would be considered a fixed cost. The remaining 55% of your premium is used to pay your claims and is the amount that is returned to you in the event of limited or no losses. You will always have a formula-based premium that you're going to get to see. One of the things that I love about the captive environment is the transparency that is offered. You know exactly how your premium is calculated, including fixed costs, minimums, and the maximums that can occur if there is a year with heavy claim experience.
In addition to the premium returns, joining a group captive provides plenty of advantages, and a few others to note are: 1. Greater control over claims. In a captive, you get an unbundled third-party claims administrator, compared to the traditional insurance market where your claims are being handled by the insurance carrier. Having a TPA creates an interesting motivation that isn't always necessarily there with insurance carriers. The TPA works for you as an owner of the captive, due to the greater input you are able to provide on claims handling and the benefit of a consistent adjuster. When you do have claims, those claims dollars tend to be lower. 2. Development of an elite safety program. While controlling claims is important, preventing claims from occurring is the ultimate goal. Therefore, the captive will provide safety services that are customized for you. And included with the safety services, some might say that the peer-to-peer networking and holistic sharing of strategies with best-in-class companies nationwide is the greatest benefit of them all. And 3. Long-term rate stability and reduced insurance costs. As you can see in this illustration, over history, rates in the standard market are very fluid and ever-changing, making it hard for you to predict the cost of insurance year to year. The reality that in the traditional market, you are already sharing risk with companies who you don't know. The issue with this is when you do have good loss years, you still end up getting rate increases. By being a part of a best-in-class group, your premium rates are actuarially based off your own loss experience and the group's experience, not the industry average, which is subsidized by poor-performing companies. The result is improved and stable rates over time.
Now, captives are nothing new. In fact, there are thousands of captive programs that exist today, but not all are built equal. From our specialization in captive insurance, Cottingham Butler has grown to become a leading captive provider in the United States.
Our aim is to help our clients lower their total cost of insurance, and we couldn't be more proud of what they are achieving. We see business owners running safer companies, lowering claims, and becoming more profitable every day.
If you'd like to learn more about the Cottingham Butler Captive Advantage, please reach out and we would enjoy discussing the Captive Advantage for your company.